All right.
Great. Good evening and welcome to the Finance and Claims Committee meeting for today, Thursday, July 9th, 2020 at 7:04 p.m. I'd like to start the meeting with the roll call. If you can please respond with present. Councilmember Hooverman,
Present.
Councilmember Keegan.
Here.
Councilmember Sacchinelli,
Present.
Councilmember Dumas, Councilmember Kides,
Here.
and Councilmember Burnett, that's myself, present, and Councilmember Theodoridis will not be joining. He is not available for this evening. So we do have a quorum. Moving on to public participation. Chitsime had informed me that no emails were sent in. Is there anyone on the line from the public that wishes to speak, Larry?
No, I don't see anyone.
Okay, so with that, I'll close public participation. And now I will share my screen so we can, hopefully everyone can see that. And we'll move into approval of the minutes from the Finance Committee meeting dated June 11, 2020. Do I have a motion?
So moved.
Councilmember Hooverman moves the minutes. Do we have any additions, deletions, corrections of the minutes? Okay. Hearing, seeing none, I'll call for a roll call vote. Councilmember Hooverman,
Aye.
Councilmember Keegan,
Yes.
Councilmember Sacchinelli,
Aye.
Councilmember Kides,
Yes.
and Councilmember Burnett is a yes. So the minutes are approved as presented. With that, we'll now move into the items 5, 6, and 7 from our tax collector. And starting off with the Claims Committee report dated July 9th, 2020. Hello, Lisa.
How are you?
Good, great.
I believe we do have special requests.
Let's see. I did not
If
see
you could
any
pull it
item
up,
over 10K, but yeah, I'll pull it up. Here it is.
let's just check. I thought we
So,
did.
let's
Maybe
see.
I'm thinking of last month.
I didn't see any over 10K in this report.
Okay, then what it is, then it's for informational purposes only. You are correct. So you don't need to take a vote on the claims this month. We will process those on our own. If it's okay with you, I'll launch into the narrative and the spreadsheets. This month for June, we're going to be giving you two separate spreadsheets. We're going to give you the end of June on our, what is now immediately prior grand list collections, as well as, because we issued our bills in May and took collections in May and June, we're starting off the new fiscal year to report the collections that we took on the 2019 grand list during the month of June, even prior to their actual due date. So I'll start with your permission with the old first and then move to the new. Last month, we talked about how we were hovering at the 98 point something collection rate, and we were optimistic that we would reach 98.6, which is what we were budgeted for. And in any normal year, we would have already been at 99%, but this is not a normal year. And as of the end of June, we hit only 98.43%. So we are slightly short of budget by 0.17%. It could have been worse. For the purposes of the audit, they will look at a 14-month collection period, and they will look at our collections on this immediately prior grant list, including July and August. So I do believe we will hit our budgeted amount with the extra 60 days. But as of right now, that is where we stand as of the end of June. It goes without saying that the fact that COVID hit affected us, the fact that the building was closed and so forth, and the fact that we had to suspend work on the tax sale. But we did achieve 98.43% of our levy, and then the sewer use and IPP figures are there as well. In terms of back taxes, we were at 3.1 million, which is actually down from last month because we have stipulated judgments to process, and the figures I am giving you for delinquent collections and current collections as well are net. So we had some credits and refunds that were there, and our figures went slightly down on our delinquent collections. But that is still a modestly acceptable figure considering the situation that we are in. That's the old year. The good news is the new year. Because we were able to mail our bills basically by mid-June, the 18th of June, we took in $10 million during the month of June on our new levy, even before the taxes were due. That is what we call an advance collection. So we were already at 2.88% of our levy, even before the bills were due. In most cases, Norwalk taxpayers have until October 1st, due to the action that you took in April, to give them an extended grace period due to COVID. We publicize that widely. It's actually printed on the bill itself. It's on our website. We think we were able to communicate fairly well to the people. The collection was off to a good start. We have had much more activity at the walk-up window than we were even expecting. We really didn't know what to expect, but we were thinking because of the extended grace period, things wouldn't be as busy, and we were wrong. It's been very, very busy. We've had a line constantly, even in the rain. And thank God we have the window open because I don't know what we would do without it. But they're also making payments online. We have the new online payment provider. Since I reported to you last month, that's going live. It's worked out well. It was not without issues, but we jumped over the hurdles we need to jump over. They have done a robust initial 3 weeks with us. We also have the bank branches taking collections to the extent that they are open. Some of them are only doing drive-through, which that's up to them, but they are still accepting our payments and they will continue to do so, but only through August 3rd because we didn't feel it was acceptable to impose upon them to have them collect all the way through to October. And given how busy we have been already these last couple weeks, I think by August 3rd, their traffic will slow down. What else was I going to tell you? Give me just a moment and I'll look. The tax sale, we're still collecting, even though the sale is on hold. And believe it or not, since November, we have had 66 of the properties pay in full, and we collected $2.5 million towards the sale. Normally, we would be basically 2 weeks away from our sale right now, but we're not. But thank goodness we had the sale scheduled. It really made a difference in our collections for the end of last fiscal year. It was good that we were working on that when the pandemic hit. Going forward, we do consider ourselves essential. And so we are going to keep that window open as long as we have to. We've talked with the administration about what to do if the building does remain closed once the weather turns, and they have some good ideas for how we will still be able to accommodate people. But we are still working in shifts. We are behind. I will admit to you that we are behind in processing things because I don't have 8 people working 5 days a week. I have 7 people working in split shifts. And it's been difficult, but we've been getting by. The work that we are able to bring home, we are bringing home, but it is not generally conducive to, we can't, for risk management reasons and cash management reasons, we cannot bring city assets home, such as checks and things like that. So most of our work is done on site. If you have any questions for me, I'd be glad to take it. I'm still working more or less every day in the building. I've been responding to a lot of customers. A lot of them are very grateful that we're open, but it's definitely been a very interesting July so far.
Thank you, Lisa. Questions, Councilmember Hoofman?
Yeah, has there been any conversation to get you guys more space to be able to be properly physically distanced so that you can bring more staff in to be able to process and get caught up, as opposed to the split shift that you're having to do now based on the physical distancing rules?
Yes, and we're pursuing it because our office is actually pretty big, and there's only 7 of us, and we think that if we can have some people working in our actual office and 2 people working in the lounge, which is where the window is, which is another room down the hall, I don't see any reason why we can't all be in, but that's something I have to go through the administration and get their okay. But the CFO is working on that with me because I am actually very, very, very anxious to do that.
Thank you. I mean, is there anything that we can do to help nudge that along, perhaps? Because I hate to see us fall behind to a place where if we're not able to open the building in a regular way, but you guys continue to slip behind, I think it digs a hole that you don't want to be in.
David, this is Henry Dackowitz, CFO. Obviously, collecting tax revenue in the full amount and as quickly as possible is a major priority for us. That cash is the engine that keeps the whole city going. Lisa and her team have done an amazing job. She was the one who came up with the idea about a walk-up window. And part of the restrictions that we say is certain assets cannot be handled off-site. Please be aware, taxes can be paid online, through telephone, through this network of banks that collect the taxes on our behalf. So we have made we also, while COVID was going on, Lisa and her team changed the computer system platform that operates our tax collection. It's much more customer friendly. We've gotten rave reviews. So we are doing everything humanly possible. And the administration is cooperating with us. This is a high priority for everyone. Again, please remember, the due date is October 1st. So this is just, we're planning well in advance, looking for any bumps in the roads, knocking them down. And we continue to do that with full support. Thank you.
Thank you. I appreciate that. And you guys have been incredibly proactive. And Lisa, you and your team, I mean, you're doing a phenomenal job, and I appreciate it. So thank you very much.
Thank you. It's our pleasure.
Great. One question I had, Lisa, when you talked about we fell short, can you put that in layman's terms in terms of the impact of that?
Yes. Did I lose you?
No, we're still here.
Okay, I lost you on the screen, but I'll just keep talking. As long as you can hear me, that's fine.
We can hear you.
The spreadsheet that we give you for the month of June of 2020, it will show you 98.43% as our current collection rate through the month of June, net figures on our adjusted tax levy, which takes into account all the changes that went into what was collectible during the course of that fiscal year from July of 2019 to June of 2020. we were budgeted to collect more than 98.43%. We were budgeted to collect 98.6% of our levy. So we fell short through the end of June of what they expected, what you expected us to collect. And normally, if you will recall from prior years, we're usually at 99 point something by the end of June. In spite of everything that we tried to do, the fact that the building was closed and the fact that I believe the fact that the motor vehicle department was closed and people were given extensions in having to re-register their motor vehicles. Normally we collect tens of thousands of dollars when people need to register their cars. So from March through June, that wasn't happening. The building was closed, everything slowed down to a crawl, and people were paying things other than their taxes. They didn't need to pay their motor vehicle taxes to register their cars because they got an indefinite extension from DMV, so they spent their money elsewhere. That is what affected us. I had a feeling it would. I was hoping it wouldn't be worse than it was. And deep in my heart, I was hoping we would make the 98.6, but we didn't. Going forward, you asked me last month, is COVID going to affect the current collection? And I told you I thought that it would. I don't know how much it will. That's part of why we changed the platform for the online and telephone payments, because we wanted to give the customers a more customer-friendly, easier, more familiar type experience, like a shopping cart experience paying online. That has worked out fine, but we're still in the middle of this pandemic and it is having effects. And there's really nothing I can do to fix it.
Greg, if I may add,
Yes.
just doing quick back of the envelope numbers based on what Lisa just reported, we're talking about maybe $1.5 million on a $250 million levy. Remember that in government, we keep our books on a modified accrual basis, which is partially accrual and partially cash. And with a focus on cash, meaning when you get cash in, you recognize it, and until then, you don't recognize it. But government accounting rules allow us to keep the books open for 60 days after year end. And if cash comes in, we can count that as revenue. If cash goes out, we can count that as an expenditure. So I fully expect between July and August to have additional revenue so that we will exceed the 98.6% budgeted number, okay? Lisa's department always has a surplus every year. And if you recall, part of our revised budget for fiscal year 21, for the first time, we reduced the percentage expected next year a full 1% to 97.6%, because we're just not sure how COVID will impact us. So I think we're conservative. We are okay compared to, I'm going to say cities outside of Connecticut, where they may be relying on sales tax and income tax. We're way ahead of the game. And I think even compared to other cities in Connecticut, where the primary driver is property tax, we're going to do just fine. So it's, again, timing, temporary. We don't know the whole issues with COVID, but I'm pleased with these numbers so far.
Great. Thank you, Henry and Lisa.
You're welcome.
Any other questions? Okay, thank you. We'll accept item 5, 6, and 7 as information only. There's nothing to advance on to the council for council approval at this time.
Chairman Burnett,
Yes.
may I
Yes.
ask, you did tell me that you wanted me to be at the council meeting at the end of the month, is that right?
Yes.
Okay.
Well, we can discuss that now or offline. In light of the fact that you said you're still looking for July and August numbers to come in, it might be premature to discuss the end of June numbers now, and maybe we should do that once we get July and August numbers in to have a complete picture.
It's entirely up to you.
Okay,
I have it on my calendar, so wait
I'll-
to hear from you.
Yeah, I'll discuss that with yourself and Henry offline.
Okay,
Great, thank you.
All right. Thank you, folks. Stay well.
Thank you.
Good night.
We'll now move on to item 8, which is the report from Oak Hills, and let me share my screen to bring up the Oak Hills. There we go. And we have the chairman of Oak Hills, Carl Dickens, on the call to take us through the July numbers.
All right. Thank you, Mr. Chairman and everyone. If you'll flip to the next slide, please. There you go. And this is moving there. I gotta move that over so I can see my slide. There we go. So what we did here, this is showing you the current revenue from 5/9. You know, that's our starting point we used this year when we opened, up through the 5th of July. And I'm showing you, Mark and I got together and looked at this. And Henry talked about it with his numbers about accruing. This 675 right now is not what's in the bank or on the books recognized yet, but this is what we are projecting and we can accrue from this point from the 5th to the end of the year. The actual number is somewhere a little more than $500,000. So this is because of certain things that were sold, the passes, and some things that will be coming in at a later date. The bank balance you see is solid as of yesterday. That's at $163,000. If you go to the next slide, I'll show you what we paid. We actually paid out $73,085 in payments this week. Keep in mind, we had a lot of debt when we opened up that started in January. And in fact, the first time that I met with this group, and the first time I showed you one of these little presentations, we had something like $441,000 in debt. I'm also happy to say that you'll see on the credit line there, as of yesterday, we also paid the final $50,000 on the debt. So the credit line's been paid back. So we're at zero there right now, which is fantastic. If you go to the next slide, please. So on this slide, it shows you that the total remaining debt that is outstanding, this is debt from January through, the top, I just lost it. The top numbers, a lot of that is recurring debt or recurring expenses, not debt. So we have roughly $69,570 left to pay off. If you add up the payroll that's been paid since we opened up, vendors that we paid since we opened up, and then this last number, loan to the back to the credit line. I think if you add those up, it's about 572,000 or somewhere in there. So the total debt that we have paid since we opened the doors back up in May is $668,892. And that includes the debt that we had to take on once we opened the doors. As I mentioned, it was in January, February, March, and April, which was a lot of vendors and a lot of things that occurred that we had no money to pay. So this year thus far, where we're at from standpoint of operating the business, trying to get a tighter rein on expenses, the revenue has been coming in, the T-sheets are full. You'll remember at our last meeting, we mentioned that we were going to start getting to a point that where some of the more expensive packages that were purchased in the early going to get us going, which we needed, and we raised $95,000 in quick money. We had a meeting on Monday. We had another meeting on this coming Monday to see what we can do to free up some of the T-sheets, because some of our folks are starting to say, I can't get it, you know, that 9 o'clock, 8 o'clock tea time, because people that bought packages for $2,500 are jumped in there and kind of sealed those off. Not a good problem to have, but not a terrible problem to have, and we'll work that out. So this gives you an idea of where we're at and what's been going on since we opened up.
Questions for Oak Hills? One question that I have is in relation to the clubhouse. Is that now functioning?
We allowed that to get opened up on a very limited basis. COVID restrictions started 4th of July weekend. We can handle 42 people on the inside. And we've got the deck where we've got the tables spread out a good 6 feet apart, 4 people to a table. And Joe did a good job of getting that squared away. We've got signs everywhere about masks, COVID restrictions, as we do with the whole golf course, because we're still pushing very hard that if you're on the course until you're actually there playing, you got to have a mask on. And some people don't seem to care, but then we do seem a lot of people that do. Some of our older patrons have called me and said, hey, I played the other day, or I walked on, I saw some people on the putting green with no mask. We've taken to where it's not really expensive for us to do, of actually getting some of the blue masks, the lesser quality, I guess, or the cheaper ones, I would say. And so we don't offend anybody, because you can get into a ruckus. Instead of going up and saying, hey, you need to get a mask on, we go up and we hand them one and ask them to wear it, because you need to have this on. Your safety, our safety, everybody's safety while we're still under this restriction. And of course, with the governor's edict day before yesterday, looks like phase 3 may be delayed just a wee bit, which will also affect the restaurant, because that'll affect people being able to sit at the bar. But the restaurant is open. People are out and enjoying themselves. This new normal is normal right now, anyway.
Great. Any other questions for Oak Hills at this time? Okay. Hello, is that a question?
Nope.
Nope. Okay. So, great. Thank you for the update. And
Thank you.
we hope next month is even better than this month.
I got my fingers crossed. I don't think we'll see things start to really slow down until probably middle to late August. And then I'm not really sure how much it's going to slow down this year, late August, September. It's been quite busy. So. All right. Thank you all very much. Appreciate it.
Okay. Thank you. Let me share my screen again so that we can go continue on in the agenda. Hold on. And we are now up to item number 9. Let me just get to it here. Okay, so item number 9, authorize the mayor, Harry W. Rilling, to execute a contract for management and administration of the city's workers' compensation and heart and hypertension program for the 3-year period beginning July 1st, 2020, ending June 30th, 2023. At a cost per claim based on the following schedule. Report only claims, $27 per claim cost. Medical only claims, $215 per claim cost. Indemnity claims, $1,175 per claim cost. And heart and hypertension claims, $1,175 per claims cost. Total estimate annual cost is $104,747, and total estimate 3-year cost is $314,241. Accounts noted. Do we have a motion on this item?
So moved, Greg. David Huvel.
Thank you, Councilmember Hooverman. And we have Craig Smith on the phone, on the call, I should say, our risk manager who will take us through this item.
Thank you very much for having me. I appreciate it. Come to this august body looking for consideration and approval of a 3-year contract as noted with a company called Kerma to provide the city third-party administrator services for workers' comp partner and retention. As background, employers in Connecticut are required to provide benefits to injured workers under their state's workers' comp statutes. Most employers will take out an insurance policy, which they will pay a premium, and then insurance carriers will then pay any benefits thereafter to injured workers. The city, we actually self-insure that. We don't take out an insurance policy. We retain the risk and or we pay the benefits directly to the injured workers. And to facilitate that, we will hire an administrator to make determination of benefits, provide infrastructure to make payments to providers, whether they be medical providers or other medical services, as well as help us handle expenses for, manage expenses for outside counsel, nurse case management, and so on to support the program. So we don't have an insurance company set up like other employers. We retain it and then again bring on a firm like Kerma to again help us with the benefits administration. Kerma has licensed adjusters. We can't just do that on our own. The state wants us to have people handling the claims that are licensed with the state insurance commissioner to actually again make determination of benefits and ensure that we're following the statutes. So the cost, again, is per claim. Given the estimate based on the past 5 years of how we've, the claims we've had. We retain the program, again, at a cost of about $100,000. If we were to have an insurance policy, we would probably be paying multiples of that. Insurance carriers, the expenses for the program over the past 5 years, the expenses being the lost wages and the medical costs and other expenses, average about 3.1 million. So if we were to have an insurance policy, an insurance company would charge us 3.1 million at least, because they're not going to lose money on us. And then they'd have expenses, they'd cover their expenses, which the rule of thumb in insurance is about 20%. So if you were to take 20% of 3.1 million, you're talking about 600,000 in addition to 3.1 million they would charge in premium. So again, we self-insure those costs, and then we have the vendor that will pay to help us with the administration of those claims thereafter. Any questions?
Any questions for Craig on this item? Okay, I guess it's pretty straightforward. So with that, I'll call for a roll call vote on this item, this authorization. Councilmember Hooverman,
Aye.
Councilmember Keegan,
Yes.
Councilmember Sacchinelli,
Aye.
Councilmember Kites,
Yes.
and Councilmember Burnett is also aye. So the item is approved unanimously and will be on the July 14th Common Council agenda for council approval.
Thank you.
Great. Moving on to the next item on the agenda, item number 10. This is to receive information on a tax relief program for the elderly, our senior tax relief program. And we have on the call Bill Ford, who is our tax assessor, who will take us through that program. And let me just share my screen again to bring up that information.
You make a motion first, or is that later?
No, there's no motion on this. This is just receiving the information.
Thank you.
Good evening, all. This is all for information purposes.
So last year, the council adopted some changes. They increased the income limits for both Tier 1 and Tier 2 through a percentage increase to the state's maximum income program. And so the new limits for Tier 1 is 57,000. The new limit for Tier 2 is 70,200. This is for our elderly. And the results of this were even better than expected. The city had originally projected that there would be 1,036 recipients for the Tier 1. This year, there are actually 1,084 recipients so far. There are people that, if they miss the filing period, can apply to the state to receive a benefit. This isn't very typical, but I leave it as an opening because you should know that it's available. The Tier 2, the reason that the number of Tier 2 actually went down was a number of them qualified for the Tier 1 program. They were on the income limit previously, and now they qualified for the higher exemption. We had a total of 129 new recipients this year. Quite often people do sell their properties, so the numbers do go up and down a little bit. But 129 initial for this year is a significant number. And so our total for the current year, the total credit will be $1,580,000. That's up approximately $132,000 from last year. And the average tax credits increased to $1,376 for 2020. This is up from $1,312 in fiscal 2019 to 20. And that summarizes the program.
So essentially, we had more citizens participating and we gave out a larger credit. Would that
Yes, sir.
be good? And let's see, you
I
have
believe
this chart too. I don't know if this lays it out any.
This shows the changes over the last few years. So we had increases both in the maximum benefit back in 2000, the Grand List 2015. The maximum benefit for the Tier 1 was $1,390, and the Tier 2 limit was $750. Those over the last 4 years have increased to $1,500 for the Tier 1 and $900 for Tier 2. I have adjusted this chart slightly from previous charts, just that adding some basic information, percent of total. Sometimes previously people told me they were confused by what the percentages were. So now this just added some things to try and explain it a little better. But you've had this chart almost every year for the last 5 years.
Great. Any questions on the tax relief program? Were there any concerns in terms of us getting the information out to our seniors so that they would be able to apply? Any impact from COVID on that? Or I believe the applications went out early in January, so that was pre-COVID.
We sent letters to everybody that received the exemption previously that there was not the state extended the time period. They did not have to reapply unless there was a change in their income. So if you were able to now qualify for Tier 1 versus Tier 2, then you reapplied. If you were already in Tier 1, you didn't have to do anything. We rolled it over and kept anybody that received it from last time. They have to file every 2 years. So anybody that filed 2 years ago was automatically receiving it this year per state changes due to COVID. The fact that we sent out the letters, the fact that we have 129 new applicants this year, I believe the information was out there, and we will continue to review. We haven't had any significant phone calls after the deadlines asking about the program, so I think the information got out there timely.
Great, great. Okay. Any other questions before we move on? Okay, great. Thank you, Bill, for that update. And
Thank you, sir. Have a good evening.
anything we can do to help our seniors, we want to make sure that they get the information and we can help them.
And we will continue to track the program. And if in the future we look to increase it like you just did last year, we will review it again.
Excellent, great. Okay, that moves us to now item 11. And let me once again share my screen to bring up that item. Okay, so this is a long one. Resolve, general obligation refunding bonds of the city of Norwalk in principal amount not exceeding $53 million are hereby authorized to be issued, and the proceeds therefore appropriated in such amount or such lesser amount as shall be necessary to refund all or any proportion of the city's outstanding general obligation bonds and clean water fund project loan obligations and interim funding obligations. The bonds or any portion thereof may bear interest, which is includable in the gross income of holders. Therefore, for federal income tax purposes pursuant of the Internal Revenue Code of 1986 as amended, as the issuance of such taxable bonds is hereby determined to be in the public interest. The Common Council hereby delegates to the mayor and the Director of Finance, subject to the final approval of the President of the Common Council, the Majority Leader of the Common Council, and the Minority Leader of the Common Council, and the Chairman of the Finance Committee of the Common Council, or any two of them, the committee, the authority to determine the number of series to which to be issued and the principal amount of the refunding bond of each series to be issued and the annual installments of principal redemption provisions, if any, other terms, details, and particulars of such bonds, including the rate or rates of interest paid thereon, to make appointments and executive documents referenced in this resolution, and to execute such agreements, instruments, documents, and certificates necessary or desirables for the issuance of the bonds. Do we have a motion on this resolution? All right, I see Councilmember Keegan's hand has gone up. So with that, we are ready for discussion, and I will turn it over to Henry Dakowitz, who's our Chief Financial Officer, and we also have our bond counsel from Shipman and Goodwin LLC, Bruce Chudwick, on the line also to review this item.
Tom, you're muted.
You're
Tom?
open, and
Keegan, if you were asking questions, you're muted.
no, he raised his hand to move the motion.
Oh, excuse me. My apologies. Let me just explain. With the approval of the capital budget last month, our annual new money bond offerings have been approved. And we expect to go out to the market to raise about $42 million net proceeds. In addition, the financial advisor and I usually receive proposals from investment banks when they monitor our bonds, monitor the interest rate market, and believe that we can save money by refunding, as we did last summer. It's like a house refinancing. We're raising new money at a lower interest rate, using those proceeds to pay off the older loans at a higher interest rate, and we have a certain amount of savings. We were approached there's a very unique situation in the market. I've never seen it before, where the taxable treasuries have a lower interest rate than municipal tax-frees. That's highly irregular because tax-free bonds, the interest on them are not taxable to the holders. So normally, using the historic, if corporate interest rates are 5%, taxable interest rates are 5%, municipal tax-free bonds would pay about 3%, assuming a 40% tax rate, and they would be equivalent. So after tax, if you had a 5% investment in taxable bonds, you would have the same after-tax proceeds as a 3% tax-free municipal issue. Right now, we're at a historic situation where the taxable bond market has a lower interest rate than municipals. So consequently, we are looking at doing 2 refundings based on 2 different ideas and groups of bonds. One will be taxable and one will be tax-free. The details are, we would look to refund about 44 million of existing bonds. Some of them are the sewer authority, the whatever the acronym is, I apologize. We would issue $44 million of new bonds. The true interest cost on those bonds, given where the quotes were, and I got these quotes July 1st, is a shade over 1%, 1.0018%. The present value savings is $2.9 million. And the present value savings percent is 6.66%. So let me explain how that's calculated. You look at how much interest we would pay on the new bonds, you compare it to how much interest we would pay on the old bonds, you add up those differences. You then take all of those savings and discount them to today. What are they worth in today's environment? So obviously, $1 we pay in the future is cheaper than $1 today because we could earn interest. So the present value savings is 2.9 million. I think the guidelines in the municipal market is an issuer should not go for a refunding unless they're saving at least 3%. And as I said, we're looking at something north of 6.65%. Obviously, interest rates move. We are looking to issue our new money bonds first. So we're in the process of preparing our official statement, preparing our rating agencies' presentations. We expect to close that in the first weeks of August. And right behind that, we would do this refunding, which we would hope to close in the first weeks of September. Obviously, it's all contingent on the markets. But if the markets continue to be favorable with these kinds of savings, we would move ahead. Be glad to answer any questions.
Well, any questions for Henry at this time? One question I had, Henry, Greg Burnett, when you say $2.9 million savings, is that a annual savings or is that over a course of a period of time? Or?
It's the life of those bonds. Okay. So if you imagined you had a 30-year mortgage and you issued, and you did a refinancing, your mortgage was originally 5% and now you can get 2%. You would save a certain amount of money for every payment, every month. We take all of those savings, the 180 payments, if you would, over a 15-year period, if you're paying annually. And then we take all of that savings. So it's a one-time present value savings worth $2.9 million today. And we look at those savings as a percentage of the bonds that are getting refunded to look at the metrics to see if it's worth it. And if I can save the city equivalently $2.9 million today over the life of these bonds, I'll do it.
Thank you.
You're welcome.
Any other questions?
Bruce, any comments from a legal point of view about this resolution versus other resolutions?
No, and good evening, members of the Finance Committee. Bruce Chadwick from Shipman and Goodwin. We've tailored this resolution along the lines of your prior refunding resolutions, with the committee being involved in the process, just like with your new money bonds. And but as Henry explained, it authorizes up to $53 million of refunding bonds to be issued by the city to achieve those savings. From a committee standpoint, this is a recommendation to the Common Council. Under the Connecticut statutes, the legislative body of the municipality has the authority to approve refunding issues. And so this will be a recommendation to them for next Tuesday evening. But it's fairly straightforward. Again, we've tailored it to be as your prior resolutions with the various folks involved. The mayor and the director of finance would be coordinating the sale, and we'd be working with them and the financial advisor to have the proper persons involved to approve the interest rates that are achieved. So hopefully, if interest rates stay where they are, you'll have some very, very good savings, as Henry indicated. You are not alone in this process, and many, many cities and towns in Connecticut are doing this right now because of the interest rates and interest rate environment that Henry described. And we've included, as you can see in here, the Clean Water Fund project loan obligations and interim funding obligations. Those are for your WPCA wastewater treatment plant projects. And we never thought we'd see the day that a 2% interest rate would be something that could be refunded. But we are seeing that quite a bit in this rate environment. So if the interest rates are favorable enough to do those, then the city can approach those as well. So, but if anybody has any questions on the detailed resolution that's in your package, I'd be happy to answer that. Thank you, Mr. Chairman.
Yes, Councilmember Hooverman.
Mr. Chairman, I just have one question. If this resolution passes the full council next Tuesday, how quickly does this happen? Are we able to do this quickly enough to take advantage of the environment that we're in right now?
I would respond.
Yes.
Legally, once it's approved, we can go.
Mhm.
Realistically, we have a team. So Angela Fogel, the budget director, Chitsime Lamb, the controller, and I on the inside, in coordination with Hilltop Securities, our financial advisor, with Shipman and Goodwin as our bond counsel. And we have to pull together documents, work with the underwriters themselves. As I said, the $42 million new money issue is first out of the gate. It's more important. I want to capture those rates. But everything I read says these interest rates are going to be here for years. So I don't expect this opportunity to go away. The Federal Reserve is pumping money into the systems to keep interest rates low, to facilitate the recovery from the recession. So I don't expect any problems in achieving this early September. What I worry about is that there have been times since COVID in March where the market was choppy and everyone was looking for security and safety. And so they took money away from municipal bonds and put them into treasuries because they read that local and state governments are having problems with their revenue sources. That's not the case with us here. We're AAA. We have the largest rainy day fund in Connecticut. It turns out there's a lot of redemptions, end of June, early July. So there's plenty of money that's looking for reinvestment. So we expect to have very good success on these two bond offerings.
Okay, thank you very much. That was that answered my question and illuminated that very well. Thank you.
Sure.
Are there any other questions on this resolution? Okay, hearing, seeing none, I'll call for a roll call vote on this item. Councilmember Hooverman.
Aye.
Councilmember Keegan.
Yes.
Councilmember Sacchinelli.
Aye.
Councilmember Kides. Yes. Councilmember Burnett is also aye. So it passes unanimously and will appear on the July 14th Common Council agenda for full council approval.
Thank you.
Great, thank you. Okay, with that, I'll call for a motion to adjourn. Councilmember Keegan moves that item. So quickly, roll call vote on adjournment. Councilmember Hooverman,
Aye.
Councilmember Keegan,
Yes.
Councilmember Sanchinelli,
Aye.
Councilmember Kides,
Yes.
and Councilmember Burnett is also an aye. We are adjourned. Thank you, everyone, for your time and
Hey,
efforts.
everybody.
And have a good evening.
Thank you all. Stay